Welcome back. Now, in the first quarter, consumer confidence improved to a negative 15. This according to the FNB Consumer Confidence Index. The improvement comes from after the index slipped to a minus 17 points in the fourth quarter due to lower levels of load shedding and a reduction in inflation, especially on the food front. Mamello Matikinca-Ngwenya, who's chief economist at FNB, joins us for a closer look at the index and what it suggests about local consumers. Mamello, always a pleasure. Good afternoon.
Good afternoon to you and all the viewers.
All right, Mamello, coming in at negative 15, maybe let's put this number into context.
So I think if we look at that number, while it's an improvement, it's still significantly below the long-term average of 0. So it does suggest that there's still some weakness or negative sentiment that consumers are still feeling or displaying. And I think if we look at the three components that make up the survey. So we asked them, we asked the respondents to the survey, would they rate the current time as the right time to buy a big ticket item? So this is your furniture, cars, anything that might require a certain level of credit. What is their view of the economic outlook? And we also asked them how do they view their own financial position. And we can essentially see from the detail of the survey today that most respondents do not believe that now is the right time to buy a big ticket item. So in essence, I think if we look at vehicle sales, for an example, vehicle price inflation is still quite elevated. So consumers do not feel that they do have the financial means to make that type of commitment. Surprisingly, consumers are feeling optimistic about their financial outlook. And this is specifically to your high income earners. And we know that purchasing power in the market really comes from that segment of the market. So what this survey is essentially telling us is that retail sales could potentially turn positive over the coming months. Consumers are not feeling optimistic about the economic outlook, which is not entirely surprising. So we're seeing, so I would say the positive really for us when we got the results is that consumers are feeling a little bit better about their finances.
What is also interesting here with especially high income earners, Mamello, is that they're feeling a little bit more upbeat than other consumers, but they're also the ones who'd be more exposed to credit. So I'm wondering if these hopes also do hinge on our kind of interest rate story and those cuts that we have been speaking about in the second half of the year.
Absolutely. You could find that consumers are thinking, okay, we've had the stability in the repo rate, so although it hasn't been cut, it's been stable for quite some time, and they are looking forward to a turn in the cycle, which is potentially adding to that optimism that they're feeling. Also, I think if we look at inflation, it is moderating. We expect it to moderate further over the coming year. So from a real disposable income point of view, that may be assisting in terms of that optimism that's coming through from that segment of the market.
And then let's maybe take a look at what's happening with the middle income and low income household, because they're, a less upbeat, I think, sentiments. And inflation, Mamello, is still quite high. So I'm wondering, what kind of inflation rate might see this part of the market or this segment in the market feeling a little bit more upbeat?
So I think two things to maybe note for that segment of the market is that bracket creep from a national what the finance minister announced from a tax point of view, we didn't see any major adjustments being made. So that erosion from bracket creep from an income point of view is certainly weighing on sentiment in the segment of the market. I think obviously the labor market story is also a very critical one. Inflation, you are correct. While moderating, it remains relatively high. But I think the point is that, as we approach the second half of this year, we do expect a notable deceleration in inflation that could potentially assist consumers. So I think those two key ingredients are quite important. And I think, as we conduct the survey through the year, it should show that. Your low-income earners, really, there we're looking at your recipients of grants. And in the budget, the minister didn't really speak too much about any increase in the SRD, but the announcement was then made post the budget on the 13th of March, I believe. So that, in essence, should assist that segment of the market to some extent. But we really need to see, an improvement in the labor market, people participating a little bit more, earning more, that is what ultimately is going to have the biggest impact from a sentiment point of view.
But I must also ask you about how this index does tie into business confidence, and maybe from a salaries perspective and an expectation, perspective there. And we are seeing business confidence also wobbling through a little bit. Can we conclude that for as long as business confidence isn't as strong as we'd like it to be, consumer confidence is also likely to wane?
Yeah, so I think if we maybe take a step back and think about the contribution of household consumption expenditure to overall GDP, we know it's north of 55%. So the consumer is quite critical in terms of its contribution to GDP growth. But from a labor point of view, right, we need an economy that creates employment to absorb all of these consumers so that they earn more and they can participate a little bit more. So confidence is quite important in the sense that, if businesses are feeling more confident to invest more, to create more opportunities, it bodes well for consumers. But we also need your very small micro enterprises to do quite well, which are not really covered in this type of survey. They look at very big entities. So we need an enabling environment for big business and small business to do well, and for employment activity and ultimately consumption activity by consumers. Because ultimately, I think there's only so much that an improvement in inflation can do, or an interest rate cut here and there can do from an improving sentiment point of view. If people do not have the means to participate in the economy, confidence will remain at very low levels for quite some time.
Mamello, always a pleasure having you with us. Thank you so much for unpacking this print for us. That was FNB's Chief Economist, Mamello Matikinca-Ngwenya.